Hi, and welcome to the Investing Chartered Accountant channel. I've got a few videos this month. I think there's 4 in total. This one's the buys and sells from the portfolio, which is about 9 months old, so I opened it in June. We've now hit the 9-month time period. It's got around just under £19,000 invested, which is pretty good going within a year. So I've tried to consolidate some outside shares. And if you want to see the other videos, I will put them in the comments. So hopefully you will like this video, and if you do, please press that like button. Please subscribe, it's all free. And I hope you find the content useful. Any advice or comments or anything I can improve on, please do so. Feel free to put it in the comments, but let's go and have a look of what I have sold. First of all, I'm going to switch it around, and there's a reason why. So I did have 12 shares in PayPal. I've reduced that by 4. It took a loss. I'm not going to hide anything. I'm very transparent. I have taken a loss on PayPal. I just, given where PayPal was, given some concerns that I have, none of this is investment advice. Feel free to do what you need to do. You've got to look after your portfolio. I wanted to release some money to put some other investments in, which you'll see shortly. So I took a loss, and I took almost £43 loss. So 24% of the original investment loss. So that's not a great position. I don't normally sell and realise losses. But I was comfortable with PayPal that I needed to do something just to protect some capital. So I sold out. I've still got 8 shares, and I'm looking to hold those until I make a further decision. Visa, I decided to sell one, made a small profit of almost £3, so just above a percent return. Greencoat, I sold 250. I've still got quite a few of Greencoat shares already, so I just trimmed it a bit to take a bit of profit. You can see I took £5 profit, just over 2% return. I tend to look at sort of 4% plus returns, so you can see I've not necessarily hit that there. The only reason I sold is because I dollar cost average down on Greencoat, and as that share price went up, I decided I didn't want to hold as many shares. I did it to take my average down, so I just put the money back into the pot. Bunzl I sold because it's just, I had quite a few positions, and you'll see it in my portfolio deep dive as I'm going to put on. I just decided that I've just got too many things there, so Bunzl I sold out of to make a £5.40 profit and a return there at just over 1%. Shell I've also sold out of, but for a different reason. I sold Shell because I have Shell and BP. I decided to take a profit on one of them, so I've kept BP and I'm looking to hold long term. So I sold all of my 7 shares and made 26% return, which is brilliant. Almost £50 profit. Happy with that. And Admiral, once again, it's because I had too many positions. So by sort of selling out of Bunzl, Shell, Admiral, it's taken my number of individual investments in the portfolio down to 32, which is still too many. It was difficult to sell Admiral because I still think it's a great one to have, but I do have other insurance companies, and I do have quite a bit of exposure within the financial services investment part, so I am over indexed on financial, so I decided to sell up. Look at that, almost a 10% return, which is brilliant. It's my first 3-figure profit, so I'm really happy with that one. That's a good position to be in, and once again, it's great because I've realised a profit on that investment, and the investment didn't last long. I think I bought into it in January and February time, so that's a great return. And as you can see, when you add all that up, it's made profit, which is where you need to be. So what have I bought? So you can see I sold one Visa, but during the month I've bought 2. I've dollar cost average down, so I now have 8 shares in total. Meta, I wish I held fire because obviously Meta keeps falling, but I've now doubled my position in Meta. In February, I sold out of all my S&P, and I think I sold out at over £95, and you can see the price has dropped. I'm looking around getting below 93 and I'll go back in, which I think it might well do. Not investment advice, please don't treat it as such. So I put in an initial position there of one share, and my Invesco All World ETF, this is the distributing one to get the shares. I've bought another 75, takes my overall position up to 100, which mirrors my accumulating shares. So I've got 100 in accumulation, 100 in distribution, so that's not a bad position, and I really do want to grow the ETFs. So from a UK financial, you can see I've sold out of Admiral, but I have bought more in to increase my position in Lloyd's. So I've gone from 300 to 500 shares now in Lloyd's. NatWest, the price kept falling, I've gone in, so I've uplifted my position to 250, and that'll be a good dividend payment. So I've got a journey to average £50 per month, and this helps that journey. Both Lloyd's, NatWest, Aviva Legal in general, all this helps me on my dividend payment that I'm looking to get, to try and get to £600 for the total of 2026. So all these get there. Aviva, you can see I've moved from 150 to 230, so I bought 80 in the month at just over £6.13 per share, so almost £500 investment. And you can see the biggest one, pretty much you can say I've sold out of Admiral to buy Legal in general, even higher. I did have 40, I've upped that now to 600. That will be a quite hefty dividend when that one comes through, I think in June time. I think most of these will come through in June. I think NatWest might be May. So these will be healthy. And if you look at my video, which tracks my monthly journey to try and hit the £50 average for 2026, you can see what these buys will do for that journey that I'm going on. So the last one to take you through is the non-financial. So Pets at Home price dropped below 190, so I've put in for an extra 50, takes my total shares up to 300. I'm just looking to decrease the average down, so I'll look to take that down to 250 when the price goes up. It just takes my average down, so that's why I've done that. Taylor Wimpey, I'm in it for the long haul. So once again, this helps me with my dividend. I'm now up to 750. That's a long-term hold, so I'm happy with that one. Unilever, the price has dropped. It dropped further than when I bought here, so I think it's now just above £41 per share as at the 6th of April. So, I maybe should have held, but I'm not a market expert. I couldn't foresee it dropping to £41 level per share. So I've got 10 and I'm up to 30, so I'm quite happy with the Unilever long-term hold. And I've increased my Vanguard FTSE 100 by another 2 because I want to increase my ETFs, so that's now up to 16. So that takes me through the buys and sells for the month. As you can see, I've done it predominantly either to dollar cost average down for the purchases, or in the case of the financials to uplift the dividends, and in case of the sales it's purely down. If I got one, it's purely down to either reduce exposure that I had in PayPal, take advantage of the dollar cost average and sell when it made a bit more profit, which was Visa and Greencoat, or just bank realised gains in Bunzl, Shell and Admiral. So that's pretty much where I'm at. I'm doing a deep dive where I'll go through my existing investments and my current investments. But like I say, if this was useful, feel free to subscribe, like, and I'll see you on the next one.